If you've ever looked at your bank balance and thought, I knew better, so why did I still do that? This one is for you. Most people don't stay broke because they can't do math. They stay broke because fear and greed hijack the steering wheel right as the money decisions matter most. The market doesn't have to beat you. Your impulses will, unless you learn to master them. Fear and greed are not bad. They're alarms. Fear warns you there's risk. Greed tells you there's opportunity. You go broke when you let the alarms drive the car. You get rich when you wire those alarms into a system, so they inform your decisions without making them. Let's start with fear, because fear empties accounts quietly. Fear is loss aversion. It's the reason a 20% drop feels worse than a 20% gain feels good. Fear is the urge to sell a great asset on a bad headline. Fear is clicking pause on your contributions because a stranger on the internet said recession. Fear whispers, do something now, when the right move is to stick to your rules and let your plan work. Greed is different. Greed is FOMO in a suit. It's the voice that says, one more trade, one more leverage, one more shiny thing. Greed pushes you to blow up your risk limits right after a win, or to buy a story you don't understand because this time is different. It's not. It's the same human biology in new fonts. Here's the truth schools never taught. You don't overcome fear and greed by being braver or smarter. You overcome them by making fewer decisions in the heat and by pre-committing to actions before the heat arrives. Process beats willpower. Every single time. Warren Buffett gave you the compass in one sentence. Be fearful when others are greedy, and be greedy when others are fearful. That isn't a catchphrase. It's a behavioral inversion. It tells you to make decisions on signals, not on the crowd's temperature. When greed is loud, widen your margin of safety. When fear is loud, let your rules add to quality at a discount. And Peter Lynch hands you the antidote to panic. The real key to making money in stocks is not to get scared out of them. Read it again. Not to predict perfectly, not to trade fastest, not to outsmart everyone, not to get scared out of them. Wealth is what accumulates when you don't donate shares to your fears. Let's build your rules, the ones that keep fear and greed in their place. First, install a circuit breaker. You are not allowed to hit buy or sell inside 24 to 48 hours of a spike in adrenaline. Not because waiting is noble, but because waiting is accurate. Nothing truly great in investing requires a same-hour reaction. If it did, the pros would have already taken it from you. Your circuit breaker turns panic into a pause, and that pause saves fortunes. Second, write a when-then sheet. Fear and greed hate pre-committed logic. Give it to them. When a core position drops 20% and my business thesis is intact, then I add 1 unit within my sizing rules. When a position grows beyond my maximum size band, then I trim back to target on my next scheduled review. When the market sells off broadly, then I reread my write-ups and my plan before I touch any button. When a hot idea tempts me, then it goes to a 30-day watch list with a 2-sentence thesis before a single dollar enters. Third, separate your money into zones so your impulses have a sandbox that can't wreck the house. Core, where you own broad, low-fee funds and a handful of quality businesses you truly understand. Satellite, where you take focused but sensible bets. Speculation, a small, clearly labeled sleeve for experiments and stories. Label each zone with its own rules, position sizes, and expected behavior. Greed will still push. Now it can only push on 5%, not 50%. Fourth, set a sleep number for risk. If a single position down 30% would wake you up at 3 a.m., it's too big. You don't earn extra for suffering. You earn for staying in the game long enough to let compounding do the heavy lifting. Size to your nervous system. That's not weakness. That's wisdom. Fifth, pre-fund your life. Fear is loudest when bills are due. Keep an emergency buffer, 6 to 12 months of essentials, so market tears don't become life tears. Forced sellers take the worst prices. People with cash get to choose. Sixth, Automate the behavior you want. You'll never regret a decade spent dollar cost averaging into productive assets. You will regret a decade spent timing moods. Set the transfers to run on the first or your payday. Increase them 2 to 5% each January. Your future self won't remember the slight sting. They'll remember the surplus. 7th, curate your inputs. Your feed trains your reflexes. If your timeline screams crash now and moon soon in the same hour, your brain will beg for action, any action. Unfollow adrenaline. Follow builders. Read primary sources, company filings, investor letters, long-form analysis. Fear fades in the presence of facts. Greed shrinks in the presence of process. Now, let's teach your brain how fear and greed actually work so you can outmaneuver them. Fear speaks the language of loss. It asks, what if this goes to zero? Answer it with math, not mood. What is the real risk of ruin here? What's the balance sheet? The cash flows? The moat? What evidence would prove the thesis broken? If you can't answer, you don't own an asset, you own a story. Stories are fragile. Evidence holds up in storms. Greed speaks the language of scarcity. It whispers, this is your only shot. It is never your only shot. Markets are a parade. Another great business at a fair price will pass by. Another opportunity will arrive. The cost of missing one good pitch is nothing compared to the cost of swinging hard at the wrong one. Resisting only shot thinking is how you keep your capital for the shots that actually matter. Here's a practical drill to rewire those reflexes in 7 days. Day 1. Write your fear script. 2 sentences you'll read aloud during a sell-off. Prices move. Facts matter. I act on rules, not headlines. Print it. Day 2. Write your greed script. 2 sentences you'll read when FOMO hits. Opportunities are infinite. My money is finite. If it's truly great, it will still be great in 30 days. Day 3. Build your when then sheet for ads, trims, sells. Keep it in your notes app. Day 4. Define your zones and caps. Core percent, satellite percent, speculation percent, small. Day 5. Set your sleep number. Maximum position size you can hold without checking daily. Minimum ad unit that feels meaningful but safe. Day 6. Automate your contribution and turn on dividend reinvestment. Day 7. Clean your feed. Mute 3 hype accounts. Add 3 comm sources. Add your 2 review dates to the calendar, mid-year and year-end. That week won't make you rich. It will make you different. Different produces rich. Let's get more concrete with scenarios. Fear scenario. A quality business you own drops 25% in a month on macro panic. Your lizard brain screams, get out. Your system says, cooling period. Reread the 10K. Check the moat. Check the balance sheet. Did the engine break? If no, add within size bands. If yes, sell calmly and recycle capital. You act. You move on. No hand-wringing. No doom spiral. Greed scenario. A flashy stock doubles in 2 weeks. Your group chat is celebrating. Your screen time spikes. Your system says, speculation sleeve only. 30-day watch list. Write the 2-sentence why. No thesis, no money. You write the why and realize you're parroting marketing. The urge fades. Your capital stays allocated to the plan, not to the party. A final, different angle. How fear and greed show up outside the portfolio, then infect it. Fear shows up as lifestyle bloat for safety. You overinsure tiny risks, underinsure real ones, and keep mountains of idle cash that inflation eats. Greed shows up as status spending. Cars that own you, gadgets that gather dust, upgrades that don't move your earning power an inch. Both drain the fuel your plan needs. The antidote isn't frugality for its own sake. It's direction. Spend aggressively on things that make you stronger. Skills, tools, health, relationships. Spend deliberately on joy, bounded joy. Starve the purchases that only serve appearances. Freedom loves boring bills paid and robust buffers. Fear and greed starve in that environment. You might be thinking, But what if I freeze in a crash? What if I chase in a bubble? That's why you install practice reps. Don't wait for the Super Bowl to run your first play. Rehearse in calm. Once a month, pick one holding and run a drill. If this fell 30% tomorrow, what would I do? If it spiked 80% above my fair value estimate, what would I do? Write the orders. You're training a muscle. When the real moment comes, your hands will know what to do. Too quick, underused tools can save you from yourself. The one-page brief. For each holding, write in plain English what it is, why you own it, what would make you add, what would make you sell. If you can't explain it to a sharp teenager, you don't understand it well enough to resist fear or greed. Rewrite until you can. The owner's stop loss. Not a price stop, a thesis stop. If revenue growth turns negative for 2 consecutive quarters, I'm out. If management issues equity to fund operations without a clear path to profitability, I'm out. These are business-based tripwires. They cut losers without letting volatility bully you. And when selecting assets, favor asymmetry, not lottery tickets. Monish Pabrai's Dando principle says it best. Heads I win, tails I don't lose much. That's not swagger, that's structure. Look for bets where your downside is capped by balance sheet strength, cash generation, or diversification, and your upside is multiples if the thesis plays out. Greed loves unlimited upside with unknown downside. Real wealth loves known downside with meaningful upside. Let's revisit Elena and Marco with one last twist. Mid-career, both get raises. Greed whispers, upgrade everything. Fear whispers, what if it goes away? Elena raises her contributions first, upgrades one thing she'll savor, and leaves the rest. Marco upgrades 3 subscriptions, 1 car payment, and 2 little luxuries that become fixed costs. 3 years later, Elena's ownership throws off income. Marco's lifestyle throws off anxiety. The market didn't choose those lives. Money emotions did. A word on relationships. You can't master fear and greed in a circle that feeds them. If your group treats investing like a casino and spending like sport, your progress will always fight headwinds. Find 1 or 2 people who talk in decades. Share your briefs. Compare your rules. Borrow calm from each other when the world goes loud. Your circle is a thermostat for your money emotions. Set it to a temperature that grows you. My quotes: be fearful when others are greedy, and be greedy when others are fearful. Warren Buffett. The real key to making money in stocks is not to get scared out of them. Peter Lynch. Heads I win, tails I don't lose much. Monish Pabrai. You don't need to eliminate fear and greed. You need to supervise them. Let fear make you careful about leverage and careful about maintenance, emergency funds, diversification, realistic assumptions. Let greed push you to keep a slice of ambition alive. Skill building, calculated bets, stretching your contribution a little each year. Then trap both inside a system that runs whether you're having a great day or a human day. If this shifted how you think about the 2 emotions that quietly run most bank accounts, take the next 60 seconds and do the first move. Install the cooling period, set your review dates, and cap your speculation sleeve. That tiny friction will save you from huge, avoidable mistakes. We make videos to build a community that plays a different game. Calm over chaos, rules over rush, ownership over optics. If you're done letting fear and greed write your money story, subscribe. Bring a friend who's ready to switch from noisy impulses to quiet systems. Together we'll get rich the way real builders do, by making good decisions boring and letting time do the bragging for us.